There's this little store in Brandon, Florida, near where I work. It's called All About Puppies, which, as you can imagine, you go in there, and there's a $3,000 puppy, a $2,000 puppy, get the hell out of here with that. Why am I doing this video? Because it's all about Bitcoin, cryptos. That's why. And since they're on fire right now, I wouldn't be doing it justice to not do this, so I must do it. Authored by Nathan Martin via Economic Edge blog, but for Zero Hedge. The math of Bitcoin and why one analyst says it's not yet in a bubble. What was that Seinfeld episode, Bubble Boy? Remember that, Bubble Boy? Bitcoin, Bubble Boy. I have read many articles lately claiming that Bitcoin is in a bubble. And I'm going to add one for this guy and for you. Ethereum and quite a few other coins. Some proclaim it similar to the famous Great Tulip Bubble. Right, we keep hearing that, don't we? The tulip bubble, I'll buy some tulips. Okay, well, you're going to buy a whole bunch of tulips. I can tell you that much with the way these things are going. Some proclaim it's similar to the famous Great Tulip Bubble of 1637. But that comparison is only for those who do not understand the significance of what is happening currently with blockchain technology. If you are new to Bitcoin and blockchain technology, I would suggest that it's highly important for you to take the time to research the basics of how it works and why it's different. Simply Google, how does Bitcoin work? The main argument of those who proclaim it to be in a bubble is that the people buying it at these prices are not buying it for its original purpose, which they believe to be enabling transactions. Yes, it is being used for transactions. Much more than 100,000 businesses now take Bitcoin for transactions, by the way. But instead, naysayers believe that others are buying it as an investment and thus will surely be burned. Well, let me stop for a second. I am buying it for an investment. I, JSnip4, sincerely tell you today, all my crypto stuff is 100% for investment purposes only, so that I can turn around and flip it and sell it. And I'm going to try to time a few of these markets, a couple ICOs if I can handle it. And if I can play my cards right, flip the Veritasium into a ton of Ethereum when it goes live in the next exchange. Take the Ethereum, sit on it. Another ICO, does it ride on the Ethereum blockchain? Yes or no? If yes, then okay, hang on to those Ethereum, dump them into the new coin before it's released. Ride that baby up, do a little double, triple, quadruple flip if I'm lucky, and be freaking set. Quite possibly set for life. Maybe. My wife said no. Hell no. All right. So not set for life, but make a fortune, not for sure. So anyways, for me, and I believe most who understand what is happening, we are not buying it for either of those reasons. We own it because we see it acting as a store of value where nothing else priced in dollars is. And that's a good point. Because while I just said that that's what I'm doing, the Chinese, some South American countries, Japan, these, all the British pound on Theresa May not being able to maintain the government just crashed today. People are going to see that and say, what the hell? I'm tired of this. China, you're going to devalue our currency again? Capital controls, we can't leave the country with our money. What do we do? Precious metals, that's one thing. How about something even easier? Cryptocurrencies, or both. I highly recommend both. But if you want to know the safest thing, make sure you got your precious metals in your possession and then play the crypto game. However, I feel very, very confident and happy with the crypto game right now. I'm not concerned about it at all. So, with interest rates artificially low, manipulated by central banks, a normal person cannot even earn near the pace of actual inflation with any type of traditional savings account. Bonds are artificially in a bubble. Stocks are artificially in a bubble. Real estate is in yet another bubble. Everywhere one who understands bubble dynamics looks, they see a bubble, but not Bitcoin. People are trading in their worthless and less. People are trading in their worthless and less dollars for them. The bubble is the dollar. The world's reserve and petrodollar is being drowned by central banks all over the globe not just our own Federal Reserve. And thus, there is no store of value to be found. This is a terribly ugly situation for people who believe in hard work and saving to get ahead, which is what you're supposed to be able to do in this country, right? In order to someday retire comfortably. Retirees on fixed incomes simply cannot and will not be able to keep up as the impossible math of dollar debt continues on its vertical ascent. We would love to love gold and silver, but those two are manipulated by central banks who own the majority of it. They manipulate and derivative the markets to artificially keep devaluation of the dollar hidden. This is true. But as I strongly believe, and I know a lot of you do too, those days will ultimately come to an end, just like everything. Nothing will last. The manipulation, the criminal stuff, it'll never last. It never does. And we've seen some very interesting signs very recently in that particular market, as a matter of fact, which I've already discussed, you know. Control of the dollar is centralized with the banks. That's why we refer to them as central banks. All the power and control resides with them, as private individuals were wrongly and illegally given the power to coin money with the Federal Reserve Act of 1913. What makes Bitcoin a better store of value? It's got about 4 different things here. Number 1, it is decentralized, and this is huge, right? No central bank, no central nothing. It's decentralized. This is huge. It means that it is not under the control of the central banks and thus cannot be manipulated directly by them. This is the most important aspect. It is a game changer as it changes the who is behind it, something that gold and silver did not do because central banks have printed money to buy the majority of it, or in this case, paper derivatives contracts that they send back and forth, left hand to the right hand back to the left hand. Caution. Central banks may be able to indirectly manipulate blockchain currencies in the future if they create ETFs and other derivatives based upon them, which, as you know, the Winklevoss brothers tried to get one going. It failed. Security and Exchange Commission said no, there's no ETF. And I said then, that's probably good news. It might be good news. I said if at first, you may find if an ETF's created, tons of investment money, big investment money come flooding in, causing the price to skyrocket. You may want to get out at that point because that same money and control can then dump it the same way, causing it to crash. So I was concerned about the ETF, and I did my videos on that back then. The good news is there was no ETF. This, however, will not change the underlying store of value, and when it happens, I would encourage you to not own the derivative, but to instead buy Bitcoin directly, again, because it's not in their control of the central banks. It's decentralized versus their centralized everything, which makes them vulnerable. Yes, central banks can print dollars and use them to buy Bitcoin, but that will only drive the price up and cause others to enter as well. In the end, they cannot manipulate what they don't control. Even if central banks were to ban exchanges in one country, all one will have to do is join an exchange overseas. This has the central banks trumped. It cannot be stopped. To better understand the power of decentralization, please take the time to watch the video at the end of this post or click on this link, which you'll see in my description box. Number 2, unlike tulips, dollars, or even precious metals, Bitcoin is strictly limited in its supply. This is where the math comes in. Bitcoin was founded in 2008, and there will ultimately be only 21 million Bitcoin ever mined. Today, we are approaching the 80% mark. The remaining 20% will take years to mine, and the mining gets more difficult and slow as we go. This is a hard feature built into the coding. It's what makes Bitcoin a store of value. The more money that comes in, the more each Bitcoin is worth. As I type this, it's $2,774 per Bitcoin, according to Coinbase. Wrong. As I'm reading this to you, because this is a couple days old, it's $3,000. Okay, where you can go open an account. Much like a brokerage account, there are currently 7.3 million Coinbase users. Of course, you can buy Bitcoin in any increment. You don't have to buy them in whole units. People all over the world can buy, own, and transact in Bitcoin. There are now 7.3 billion people on the planet. So if all 21 million Bitcoin were distributed evenly to every person on the planet, each person would have only 0.00287 of one Bitcoin. Another way of stating that math is that only one person out of 347.9 5.6 people can possibly ever own a whole Bitcoin. Today, the market cap of Bitcoin is $45.17 billion. And by the way, Ethereum is chomping at the bit, right behind it, at its feet, so to speak. The more money that comes in, the higher the market cap, the higher the price of Bitcoin. Many analysts start to compare Bitcoin's market cap with that of large companies like Apple, whose current market cap is 18 times that of Bitcoin at $810 billion. But here's the deal. Bitcoin is not a company. It is a form of money. Unlike dollars, there will not be an endless supply. In fact, if you took the entire M2 money supply of the U.S., currently $13.5 trillion, and put it all into Bitcoin instead, then each Bitcoin would be worth $642,000 approximately. But Bitcoin is not just traded in dollars. It's traded in every currency in the world. And right now, global M2 money supply is calculated at roughly $72 trillion, or $3.4 million per Bitcoin. It's true that other blockchain currencies are springing up like daisies or tulips, but their market caps combined are just now rivaling that of Bitcoin's. So yes, they will be diluting Bitcoin's math. Not all cryptocurrencies have hard limits to their supply, and that will mean that they will always be worth less. Right now, Ethereum is in second place with a market cap of about $24 billion compared to Bitcoin's $45 billion. Litecoin is another cryptocurrency designed to be silver compared to Bitcoin's gold, if you will. There will only be 84 million Litecoins ever mined, exactly 4 times the amount of Bitcoins. However, Litecoins are currently trading for roughly 1/100th of the price of Bitcoin. I would expect the math to eventually catch up as more people become aware of Litecoin's also limited supply. Number 3, Bitcoin is a better store of value because it is secure. Decentralization and encryption make it secure. It can be stored in electronic cyber vaults where you keep a hard copy of the encryption cipher. This means that your exchange can be hacked, your computer hacked, but your Bitcoin don't actually reside in either. They reside on someone else's computer somewhere, and only you have the code to get it. Thus, they cannot be confiscated by a government, a banker, or a hacker. I liken this to the pursuit of freedom versus the pursuit of security. When you pursue freedom, you get security at very little cost. That's what decentralization does. Bitcoin is the pursuit of freedom, whereas centralized systems such as central banking or even socialism are the pursuit of security and the abandonment of freedom. Pursue freedom. Number 4, Bitcoin transactions are stored on a public ledger. All confirmed transactions are included in the blockchain. Again, decentralized bookkeeping is less vulnerable and more secure than centralized ledgers. This is where Ethereum, another blockchain currency, shines. Ethereum is built upon an encrypted ledger and can be used for many purposes, not just as a currency. One use is that these encrypted ledgers will enable safe and secure online voting one day soon. Now that is what I'm talking about. Voting through the blockchain. Not printing up a fake application of a dead person to change the social security. Nope. You got one code for yourself and that's it. Have a nice day. Someday Bitcoin will, in fact, be in a bubble, but that day is not now, not even close. The great thing about all cryptocurrencies is that they can and do exist alongside of whatever money we use for our transactions. They also exist alongside of gold and silver and may in fact be drawing money that otherwise would be seeking a store of value there. So I say, let the competition reign. I will use dollars for transactions because I have to for now, but I will use cryptocurrencies, gold and silver to park my dollars so that the central banks cannot destroy their value. And that in a nutshell is why Bitcoin is not in a bubble and will not be for quite some time. That said, do expect many sharp pullbacks along the way. Remember that nothing moves in a straight line. Everything moves in waves. You need to pull back to fuel the next push higher. This is true with all waves. The chart shape is definitely showing parabolic growth, but I expect that when looked at across many more years, this will simply be a part of a building a base. So how will we know that a true bubble has formed? For me, I will know that cryptocurrencies are the future and that they will trade alongside sovereign currencies and will eventually replace them. I will not own any cryptocurrency created or managed by a bank. Until the market cap of Bitcoin rivals that of the United States, I will not be convinced that growth has stalled. There are, of course, other signs we can look for. As a review, here are Hyman Minsky's 7 bubble stages. Stage 1, disturbance. Every financial bubble begins with a disturbance. It could be the invention of a new technology, such as the internet, Bitcoin. It may be a shift in laws or economic policy, the creation of ERISA, or unexpected reductions of interest rates are examples. No matter what the cause, the outlook changes for one sector of the economy. Stage 2, expansion/prices start to increase. Following the disturbance, prices in that sector start to rise. Stage 3, euphoria/easy credit. Increasing prices do not by themselves create a bubble. Every financial bubble needs fuel. Cheap and easy credit in most cases, that fuel, central banks creating it like mad. Without it, there can be no speculation. Without it, the consequences of the disturbance die down and the sector returns to a normal state within the bounds of historical ratios or measurements. Stage 4, overtrading/prices reach a peak. As the effects of cheap and easy credit digs deeper, the market begins to accelerate. Overtrading lifts up volumes and spot shortages emerge. Prices start to zoom and easy profits are made. This brings in more outsiders and prices run out of control. This is the point that amateurs, the foolish, the greedy, and the desperate enter the market. Just as a fire is fed by more fuel, a financial bubble needs cheap and easy credit and more outsiders. Stage 5, market reversal, insider profit taking. Some wise voices will stand up and say that the bubble can no longer continue. They argue that long-run fundamentals, the ratios and measurements defy sound economic practices. In the bubble, these arguments disappear within one overriding fact: the price is still rising. The voices of the wise are ignored by the greedy, who justify the now insane prices with the euphoric claim that the world has fundamentally changed and this new world means higher prices. Then along comes the cruelest lie of them all: there will most likely be a soft landing. This stage can be cruel, as the very people who shouldn't be buying they are the ones who will be hurt the most. Right? Everyone's going to get out and crush everyone else. The smart people will. Stage 6, financial crisis and panic. A bubble requires many people who believe in a bright future, and so long as the euphoria continues, the bubble is sustained. Just as the euphoria takes hold of the outsiders, the insiders remember what's real. They lose their faith and begin to sneak out the exit. They understand their segment, and they recognize that it has all gone too far. The savvy are long gone, while those who understand the possible outcome begin to slowly cash out. Stage 7, revulsion/lender of last resort. Sometimes panic of the insiders infects the outsiders. Oftentimes, it is the end of cheap and easy credit or some unanticipated piece of news. But whatever it is, euphoria is replaced with revulsion. The building is on fire and everyone starts to run for the door, so to speak. Outsiders start to sell, but there are no buyers. Panic sets in, etc. So it's a great article. I had to read that because you could say, well, these prices are already insane for these cryptos, especially Ethereum and Bitcoin. This is insane. But when you consider it was pennies at one point when it first came out, and then it was $1, then it was $2, 10, 20, 50, 100, 200, 500, 1,000, 1,500, 2,000, 2,500, $3,000. And in each instance of it rising crazy like that, there are people who constantly say this is a bubble. And it kind of acts like, when you look at it overall, yeah, it's gone so insane, how could it not be a bubble? Only to find out it keeps going higher, which means what? Our mind telling us this is insane is not programmed correctly in regards to cryptocurrencies. We're thinking of markets, stock markets, bonds, other crap in the past. There was no other time in the past where there were cryptocurrencies. So our brain, thinking these crazy, insane moves, they're insane and this is bubble territory, are not right, because we can only compare, our brains can only compare it to past similar things. Again, stock market, bonds, etc., even precious metals, commodities crashing. But these are Bitcoin, these are cryptos. These are also not controlled by the club. They're not controlled by the banks, right? This is a whole different animal. And for that reason, our brain doesn't want to look at it that way and say, well, maybe because that's why, or that's why these things are going so insane. They're not actually really insane. We're dealing with a whole nother, animal over here, so to speak. And in other words, we ain't seen nothing yet. Need I remind you? Cliff High, Webbot, 2018. not too far into 2018, very early 2018, we're seeing numbers like 13,000 plus for Bitcoin. 500 something dollars for Ethereum, which might actually be here before we get to 2018. I don't know about the 13,000 Bitcoin, but Ethereum has went up like 50% in just a matter of days. And it was 210, like 11, 12 days ago, 210, $346 hit the all-time high here as I'm doing this video tonight, you know, about 4:50 p.m. Eastern time, 4:30, somewhere around there. If you're thinking about getting into these things, oh, I can't get it now, man, it's way too... Imagine those who said that at $200 Bitcoin. Oh, I can't get it now, I'm waiting for it to come down again. Only to go to 400, 600, 800, 1200, 1500, 2000, 3000. Now we all sit back talking, man, you remember it was 250? I should have bought like 5 of them, man. I could have had freaking $1,000 worth right there. Or four of them, 1250, whatever. Make it 1250, you have 5 of them. Man, I could have 5 for $1,250. Now you can have half of one, actually less than half of one, for $1,250. But if you did that back then and you had 5 times $3,000 is $15,000. Your $1,250 investment, $1,250 investment today, which only 2 years ago, I'm talking $250. 15,000. Is that a nice profit? Yeah, the S&P was up today, 22 points. The Dow Jones climbed 138 points today. Antiquated. Legacy. Outdated. How about crypto was up today 50%? Today. 32% yesterday. 15% the day before. You know, that's what we're talking about. Again, I'm expecting a pullback. Like he just said, there's going to be. The webbot already said, yes, there's going to be big pullbacks. Some coins are going to have devastating pullbacks that scare the crap out of you, only to recover right back where they left off. Some will have the same devastating, not recover immediately, but will ultimately recover not too long. It's just part of it. So that's it for today, my friends. Unless some breaking news comes out and I have to run out to my car. Hey, quickly, hey, check this out. You know, unless one of those numbers happens. Take care.